Welcome, everyone, to another edition of the Tony Sirianni podcast. I am thrilled to have Tara Popernik with us today. She is the Executive Vice President with LPL, Head of Wealth Planning and Trust. Am I more or less correct with that, Tara?
Yes, exactly. Thank you,
Right.
Tony.
Great. Well, it's good to have you here. And what I love about this conversation is that this is really the right time of year to be having it, right? I mean, we all live by the calendar, and there's a lot of good reasons, for tax purposes or whatever too. But this must be a busy time for you.
Oh, very much so. As clients are gathering all of their year-end statements, their W-2s in preparation to file taxes, it's a great time for advisors to engage with them on their wealth planning. So my team expects to be busy first quarter.
Um, let's talk a little bit about your path to get, to where you are. So, just tell us a little bit about where you started.
Sure. So I started in the financial advising industry as an associate to two successful high net worth advisors. The experience really taught me what it takes to give advice. We didn't have voicemail during the day, and it meant that you just fielded all kinds of calls, whether
Yeah.
it's, hey, what's the balance in my account, to I'm at the hospital and my granddaughter was just born, and can you help me open a 529 plan?
Yeah, yeah. I mean, look, I agree. My daughter, I have four daughters, and one of them started in the industry and was asking how she should start. And I said, well, start as an assistant before you see if you like the business. You kind of go
Mhm.
through a lot of the same stuff you're going to do as an advisor, and then nobody could tell you, oh, we can't do that because you'll know you can or you can't right from the get-go.
Oh, exactly. It was really, not just advising financially, but really being part of people's lives
Yeah.
because they would call up the team, really no matter what was going on with them. So, it's that using the advice and using the planning to help people be empowered to make decisions long run.
Yeah, and after your health, it's the most important thing. I mean, you are sitting, as you said, on all those conversations. So, an important time. Um, you always talk about, well, you and I have spoken before, and you've talked about getting your financial house in order. What do you think? Just some advice for advisors who are sitting as we said, it's the time of year, right? And they're sitting down and they need to talk to their clients about this. What are you saying to them?
So first and foremost, it's really just understanding what your overall financial picture looks like.
Yeah.
What's your income? What are your expenses? What assets do you have? What liabilities do you have outstanding? And the advisor is in a position to help clients pull that all together so that they can see that holistic picture. And then it's really a level set on priorities and goals because what you have is the starting point, but then where do you want to go is the next question. And the financial plan is the bridge to get from point A to point B.
Yeah, and you got to go through a lot of what ifs, right?
Hmm.
I mean, what if this happens? What if that happens? And also, advisors, oftentimes, this is obviously not all the time, but they tend to kind of focus on one area, the area they're comfortable in that they want to talk about. They don't maybe talk about life insurance or something that's outside, right?
Right. It's the good financial planning is really a 360 picture of a client's financial life, not just focused on a retirement date or should I fund a Roth or a traditional 401k, but really what are where are you today and what are all the what ifs that you need to protect around? So, life insurance, obviously very important. Disability insurance, possibly even more important for many especially younger earners, because they're more likely to become disabled than they would be to die unexpectedly. And so, ensuring that clients are really prepared for some of those what if scenarios, really important as part of this process.
And so if an advisor, let's say advisor comes to LPL and they're working there and then they need to do like an estate, checkup or find out, or it's complicated, let's even say. So what do you guys do when they come to you with those problems?
So we have an advanced planning and high net worth team full of subject matter experts. So that includes former practicing attorneys, tax experts, advanced planners who can help the advisor think through and then actually build and help deliver that financial plan to their clients.
Yeah, because things change. I mean, right now taxes are one way, they could be another way in 3 years, right? So people it's hard to plan. That's the tax piece.
Of course. And of course, we just got this new tax law last year. There are a number of states that are considering changes to state income tax laws or state estate tax laws on a go forward basis. So, very important to always kind of be on top of what's happening. But also, if we have to, shift the plan to really optimize for tax efficiency for clients.
Yeah, I think you do have to be ready to make, those sort of bold moves. But here's the thing. In order to make those bold moves, you have to sometimes have uncomfortable conversations, right? You have to be able to talk about things, and bring up topics. There's a kid with special needs, or there's a kid with a cocaine addiction or something. You've got to have real conversations. And sometimes they're not, or divorce, which is, a
Mhm.
miserable thing for everybody, and you got to be able to talk about it.
Yeah, so really trying to dig in and understand and get to that deeper level of discovery with clients. Who are they? Who's in their family? What are the things that are top of mind? What are the things that are keeping them up at night? In order to align the finances with what's going to help the family be most successful in the long run.
Yeah, and that means maybe some transparency around inheritance.
Much transparency around inheritance. Really the question of when to tell children what they will or what they won't inherit is a big one that we get all of the time. And some clients really want to have the big reveal, but others, and I found in my experience, this works a little better to almost turn it on like a dimmer switch. It's always surprises me that wealthy clients don't think their kids know how much they're going to inherit, but at the same time, it's you've been on a nice vacation every year. Your parents have a vacation home. Your parents can afford college or some of these other things. So of course there's money behind it, but then some of the harder conversations are around how that is split. Is it always equal amongst children? Is there a philanthropic component that parents are adding in their legacy? The more that they can be transparent and explain some of these things to their children as they become adults, the better that the plan will ultimately be. And sometimes it'll allow the kids to plan for themselves because
Well,
we
it's like,
run it.
when's the best time to give your spouse bad news? Yesterday. What's this? You should let them know as soon as you can. Um, they'll talk a little bit about, how advisors should approach those conversations as they come up. I mean, if you're doing a plan, you're saying, hey, we're going to need to put this plan together for you guys, right? And in your mind, you know where the problems are. You're maybe dreading the conversation. Well, how do you suggest they do it? In the course of the plan, address it right up front, or maybe you schedule, a separate meeting on something if it's important. What's the best way?
Oftentimes, I think you can really frame it in terms of trade-offs.
Mm.
A client may be coming to you and saying, I absolutely, positively want to retire at age 62. But retiring at age 62 may mean they can't necessarily afford to spend as much as they would want to spend by the time they're 85. So, maybe there's a little bit of a trade-off framing there. Hey, if you work till 65, then you could afford that additional vacation per year. Or if you were to willing to take a little bit more risk in your portfolio in retirement, then maybe we could align the plan in order for it to work. There's only a few variables that people can control, and so it's really about how do you dial those different switches in such a way that we can make the plan work. And as long as the advisor is really upfront about what some of those trade-offs are, it can be a very successful and empowering conversation.
Well, I guess you're never going to beat time in this scenario. Time is marching on. You're going to die, and people don't necessarily think they will. And then you're going to have to pay taxes. So let's get into the tax thing a little bit, especially the estate tax. And we hit on it. We hit on it briefly, but now it's 15 million, right? There's these
Yeah.
conversations change, and it must change in your office too with what you guys can deliver or are delivering.
Certainly. So yes, the OBBBA, the One Big Beautiful Bill Act, made that $15 million
Wow.
exclusion permanent at the federal level. And that's going to continue to increase with inflation going forward, which means that fewer families need to worry about a federal estate tax. So now the focus for a lot of high net worth households is proactive income tax planning to keep more of what you earn. And then in some cases, state estate tax planning. So for those states that impose a state estate tax, making sure that
I
you're
mean,
forced.
are you seeing people moving to states? I mean, you read about it all the time. There's all these, and people have second homes in Florida, for instance, and you see how busy. Last time I was in Dallas, I saw Goldman's Tower going up. I saw a lot of
Mhm.
other, financial district in Miami and Nashville, Tennessee, which also has the income tax advantage. What are you seeing?
So I've seen it a bit, and primarily when you have a business owner client who may be contemplating a sale a few years out, there have been instances where someone is relocated in order to take advantage of a um, lower income tax state. But by and large, especially for wealthy families who have the privilege of really living anywhere they want to, the combined factors of family, friends, activities, lifestyle all coalesce together to drive the decision of where somebody wants to live, not necessarily just taxes. Home is really where the heart is, and so people want to live where they want to live. And studies have
A
shown
lot of
you
those, a
don't
lot of
see
those
people
people
moving.
are driven. A lot of those people are driven by capital gains versus income taxes anyway.
Mhm.
And there's a lot of states are a little bit less, a bit picky on those things, right? Um, when you see my opinion is first of all, this is a dual question, right? AI is becoming more and more important, and certainly advisors are using it for soft tissue stuff, a lot of ways they interact with clients, right? But it's creating efficiencies at scale in a lot of things. I would think planning too, certainly you look at CPA practices, there's a ton of AI there. So two questions. One around AI and how are you guys using it? What are you seeing the impact of, just for the advisors to deal with you and also giving this kind of practical advice. And then the follow-up would be around alternatives because I think AI use is going to drive alternative use for advisors simply because clients will use AI to say, "Hey, give me this ETF," right? So a lot of people see the same things because AI just gives you the consensus opinion, and for advisors to add value, they got to do alts. But that brings up all the stuff that you guys do, all the crazy accounting. There's tax issues, so I guess let's talk about those two things: AI and alternatives. In the
Sure. So we're certainly seeing advisors use a lot more AI, whether it's just to take notes on a meeting and then send follow-ups or help gather client data. I do see a space in the planning world, especially for both enabling clients to get their financial house in order, helping to pull together data from different sources, but then also taking that output from financial planning software, which is sometimes hundreds of pages and condensing it down into something that an advisor can deliver in a meeting.
Well,
Um,
legal documents would be another way.
mhm.
AI, really good at looking over very complex legal documents that families, put together.
Yeah, and we are working with a number of software providers to help summarize some of those legal documents so they can be very easily understood both by the advisor and the client. And what does this really mean? What does the waterfall look like from this particular trust without reading all 20, 30 pages of the trust language?
Yeah, yeah. So that's a help right there. So then, in terms of alternative use, what are you guys seeing? And then, what are any recommendations you might have in terms of, planning? Because it requires sometimes its own methodology.
Certainly. So first and foremost, obviously the market is really driving into more private investments because that's where a lot of the returns are. But companies are staying private for longer, and if you want to be part of that growth, you have to be invested there. So we're seeing greater alt adoption just really across the board, not just with the qualified purchasers, but also your accredited investors and the government may be pushing to allow more people to invest in alts in more different ways. The big thing there, though, where a planner and an advisor has to help take the reins is around liquidity planning,
Mhm.
because some of those investments don't have that same day or next day liquidity that you get with your more
Yeah.
traditional investments. And so they have to understand what is their client going to need in terms of cash flow on an ongoing basis and plan around that cash flow.
Do you see the plans that you create, or do you see advisors, putting the alternatives language in the plans, like saying, hey, look, let's talk about your alts now.
Yeah, as part of the asset allocation, certainly. And what you see in a lot of the planning software is when you add alts to an allocation, it reduces the volatility overall and can enhance return.
And do you see them actually asking like specific planning questions now based around alts? Hey, you have all these alts in here. Now here's more work to do for us.
Yeah, a little bit. And it's both on the asset allocation side, but also on the asset location side. So where's the most efficient part of your portfolio to hold that private credit fund? Because that's
Right.
all ordinary income to you. Maybe we can shelter it in a retirement account, for example.
Yeah, yeah, or some of the gift giving strategies, wrap around, you get sort of those illiquid assets, put in there. Yeah, that's great. Um, the one other thing I know you're getting inundated now, especially with the markets where they are, is appreciation strategies. So, hey, I bought this stuff, and now, like you said, maybe I need some liquidity now, or something happens. What are you seeing in terms of that?
Yeah, a lot of questions on how do I manage my cap gains exposure
Especially
after.
this time of year, right?
Yeah,
Everything's getting like, oh, yeah.
years of double-digit returns. I have all these gains built up in my portfolio. What can I do to reposition? Um, Charitable giving plans are always a good idea, and donating appreciated securities to the extent you're going to give to charity, you can kind of siphon off some of those gains there. Um, Tax loss harvesting, if at all possible, to, let's say you want to do a little bit of a portfolio reposition in January, you now have the rest of the year to look for tax loss harvesting opportunities in order to offset that initial gain. So the advisor really needs to work hand in hand with whoever the tax advisor is to set up a tax diversification policy and even set a tax budget for the year so the client doesn't have any surprises come this time next year, but also is achieving what they want to achieve from allocation standpoint or a reallocation standpoint.
And that, we're trying to find ways to be, we need things that are differentiators for us, going forward, especially with AI, sort of, dragging everything to the norm or to a consensus, right? And so you need ways to differentiate. And if you can understand the tax, get your arms around it, that's a value. And you guys do that, right? That's your
Yes,
whole
yes, we do.
that's the whole
That's
reason
our.
we have you there. Yeah, great. Well, look, really appreciate it. Appreciate all this insight, and advisors need to kind of get on this stuff. This is the right time of year for it, as well. So, anything I didn't ask you about that you wanted me to go over?
So really the key to planning and planning well and developing these long run relationships is understanding your client's objectives and priorities, and it can really drive your practice. I mean, we've studied this with our growth study last year at LPL and found that those advisors who are really engaging in this planning activity grow much faster than the average advisor.
So it's a good best practice, but it also could increase your bottom line. That's that's the end of the day.
Exactly.
All right, great. Well, look, thanks for being on the show, Tara. We'll talk again, maybe around tax time.
Sounds good.
All right, thanks a lot.
AdvisorHub and LPL Financial are separate entities. This material has been created and designed for licensed financial professionals only and may not include the level of detail, explanation, and disclosure needed for a general audience to accurately evaluate the facts. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer. Member FINRA SIPC LPL.